Hello, friends. Trading may sound easy, but in reality, it is just as difficult. Understanding market movements might be simple, but controlling the movements of your own mind, that is the biggest challenge. Have you ever thought, my strategy was right, then why did I still make a loss? The real battle isn't outside, it happens within. And The Disciplined Trader is the book that teaches you how to win that inner battle. This is not just a trading book. It shows you the path through a mental war where emotions, beliefs, and discipline truly change your game. So, let's dive deep into this book. Chapter 1, The Road to Success. Have you ever felt that you did everything right? Market analysis, strategy, timing, everything. Yet the result wasn't what you expected. You sat before the screen, fingers ready, plan prepared, but as soon as you took the trade, you panicked. Fear set in. A small market movement shattered your entire confidence. This is exactly where a trader's real journey begins, the road to success. But this success doesn't come just from charts, indicators, or news. It comes from conquering your own mind. Let me tell you about a boy who was new to the stock market. He took his first trade of 10,000 rupees, thinking the risk was small, just wanting to gain some experience. But as soon as the trade went into loss, his heartbeat increased, his hands started shaking. It was just a minor loss, but the fear felt like he would lose everything. That very day, he asked himself, am I even made for this world? And this is the same question thousands of traders ask themselves every day. The path to success is no straight road. It's a path where at every step we confront ourselves. What we think, what we believe, what we feel, all of that silently controls our decisions. We think we came to understand the market, but in reality, the market forces us to understand ourselves. Imagine a boxer who steps into the ring every time knowing the opponent will punch, yet he doesn't fear, because he knows fear isn't his weakness, it's his trainer. Similarly, when a trader stops fearing loss, only then he learns to win. But this shift doesn't happen in a day. Often people keep changing strategies, watching YouTube videos, adding new indicators, yet the result doesn't change. Why? Because the root problem is not outside, it's inside. There is an invisible wall inside us made of our old beliefs, childhood conditioning, and past failures. When we trade, all of this stands before us like a wall. Every small market volatility hits that wall and shakes our thinking. The road to success begins with self-awareness. A professional trader once said, trading is not about predicting the market. It's about controlling yourself when the market does something unexpected. And this is where most people give up. They think, maybe this isn't for me. But in reality, they just haven't learned to understand their own emotions. This chapter brings forward this raw reality, why people self-sabotage, and how the right mindset becomes the biggest edge in trading. Just imagine, if you could remove your fear, doubt, and impulsiveness, wouldn't all your decisions be much clearer? The road to success isn't easy, but it is straight. If you learn to listen to the noise inside you and then control it, this book takes you on that first step. The journey begins with the understanding that it's not a battle against the market, but a war with yourself. And the one who conquers themselves becomes the true trader. Chapter 2. Some perspectives on probability. Imagine you have a coin. You flip it, heads or tails. Each has a 50-50 chance. But now think, if it comes up tails 3 times in a row, what will happen on the fourth flip? Most people would say, now it must be heads. Why? Because our brain tries to find patterns even in random events. And this becomes our biggest mistake in trading. The market is no straight path. It's an open sea where every wave is unpredictable. But being human, we crave certainty. We want that every time we take a trade, the market behaves exactly as we thought. When it doesn't, we break down. This is where the true understanding of probability begins. Here's a story. There was a trader who always traded with high conviction. He felt his analysis was perfect, and taking a trade was a test of his confidence. But after 4 consecutive losses, before the 5th trade, fear had already filled him.
He started thinking, what if this is a loss too? His hands trembled, his heart rate increased, and guess what? That day he took his biggest loss. Why? Because he mistook probability for prediction. Probability means the possibility of an outcome, not a guarantee. But in trading, our mind takes it the exact reverse. We think that if we did everything right, the result should be accordingly. But the market is like a casino, where the edge matters, not the individual trades. Imagine you own a casino. You have a game where out of every 100 times, you win 55 times and the customer wins 45 times. If a player comes and wins 5 times in a row, do you panic? No, because you know that in the long run you will win. A professional trader does the same. He doesn't care if a single trade wins or loses, because he knows his edge will keep him profitable in the long term. But a new trader ties every trade to his ego. When a trade goes to a loss, he starts thinking of himself as a failure. The biggest challenge in trading is accepting uncertainty. Our entire life teaches us certainty. If you pass, you go to the next class. If you do the job, you get the salary. If you work hard, you get the result. But trading is a place where you can do everything right and still lose, and make a mistake, yet win. So, when you understand probability, you stop having expectations from the market. You simply follow the process. This mindset gives you emotional stability. When an experienced trader was once asked, "How do you stay so confident?" he replied, "Because I don't expect to be right. I expect to manage whatever comes." Success here doesn't mean being correct. It means being able to think according to the situation. Probability teaches us that there's uncertainty in every outcome, but handling that uncertainty emotionally is the real skill. And no strategy or indicator can teach you that. It comes when you accept that loss is also a part of trading. Another real-life example, a girl who did intraday trading. One day she had 3 losses, and before the 4th trade, her mind was thinking just one thing: now I have to win. She increased her position size. The result was a huge loss. For her, that became a lesson. The desire to win never changes probability. Understanding probability means allowing yourself to be wrong, and that permission gives you emotional freedom. So, next time you take a trade, ask yourself, have I come to be right or to be disciplined? That question will lead you to the mindset that separates a true trader from an average one. Chapter 4. The Dynamics of Perception. Show the same chart to 2 traders. One will say, the market will go up from here. The other will say, no, it's going to fall. Isn't that strange? The market is the same. The data is the same. The candles are the same. Yet their perceptions are different. Why? Because we don't see the world as it is. We see it as we are. In trading, perception acts like an invisible filter made from our past experiences, beliefs, and emotions. This filter decides how we interpret the market. Now think, if a trader had a big loss on a specific pattern last time, the next time that same pattern appears on the chart, his subconscious fear will activate. He won't see logic, he will only see danger. But another trader who made a profit on that same pattern will see that setup as a golden opportunity. That means our perspective is more powerful than the chart itself. Let me tell you a story. There was a boy, let's call him Rahul. He learned from a webinar that the head and shoulders pattern is a bearish signal. The next day, he saw that pattern and shorted without thinking. But the market moved opposite and he took a big loss. He checked his analysis, everything was correct. So where was the mistake? The mistake was in perception. The pattern was incomplete. There was no volume confirmation, but his mind saw only what it wanted to see. Our mind craves certainty, and when it feels a pattern might yield a certain result, it ignores all other signals. This is called selective perception. We only accept things that match our existing beliefs. Everything else either doesn't appear or doesn't make sense. This is the most dangerous trap in trading. Often people say, the market cheated me. But in reality, the market never cheats. Perception cheats. The perspective through which we see the market is what makes us blind. A trader once told me that he used both MACD and RSI for confirmation. On a day when both indicators were giving opposite signals, he ignored the RSI because the MACD matched his belief. The result was a big loss. Perception isn't limited to patterns or indicators. It also controls our emotions. When we are in fear, every move seems dangerous. When we are in greed, every move looks like an opportunity. And this shifting perception takes us away from our strategy. Controlling perception isn't easy. It's a mix of everything from our childhood to every small and big experience. If you were repeatedly punished for being wrong as a child, as a trader, you will see loss as punishment, not as feedback. Another real-life example. A girl who always booked small profits quickly. She had a belief, book profit quickly or else you'll lose everything. One day, a perfect trend came, but she exited early. Later, she saw that the market had hit her projected target.